Real estate can make you become rich.
Really?
Damn.
What's up, everybody? Welcome to VC. My name is Vincent.
And I'm Chloe. So if you lived through the recent real estate and economic recession going on in 2021, no doubt that real estate builds wealth more consistently than other assets classes. Not gonna lie, not everyone notices this, and this might be kind of sad or cause some emotional pain to some.
Remembering 2008, when the last economic crisis before the COVID-19 crisis hit, the country was swept away by the crisis which our generation had never seen before until today.
That said, appreciation or the rising of home prices over time is how the majority of wealth is built in real estate. This is how people make a large windfall of money. While prices fluctuate over long-run, real estate values have always been most likely going up. So today we will be talking about capital appreciation in real estate.
Basically, capital refers to anything that generates income, and an asset's appreciation in value over time is known as the capital growth or capital appreciation. Easier to understand, capital appreciation is the increase in value of your property's market price.
This figure is broadly measured or calculated by the difference between its current market value and its purchase price when the time the property is acquired. Thus, its capital growth equals to property's market value deducting with the original price paid.
There are numbers of reasons why property investors focus on capital appreciation tends to do so. For example, capital appreciation is a funding retirement for investors, or maybe when they are planning to send their children for study abroad in overseas. This capital appreciation helps in supporting the fund instead of using their savings. These types of investment normally follow a long-term investment strategy, so they won't be eager in their investment journey as they are investing in property that are likely to increase value in time. Often, you won't release the full benefit of your investment until sell time, when the property can be sold with a higher price, then added profit goes back into the investor's pocket.
Yep, exactly. Property in Malaysia typically increases 3 to 8% every single year. Easy to understand, investors buy the property, wait for it to go up in price, then sell it again. But this really depends on when you enter the market, as property market is a cycle. Take it as an example of the situation right now, which is during this COVID-19 pandemic, right? There are a lot of investors out there who are still scouting for a good property investment, as they strongly believe that the economy will be improving and they are confident that housing pricing will continue to rise.
This is as known as the buy low, sell high. So if you're wondering, then does a high-rise building or landed property appreciates better in price? Landed property is generally will have a higher appreciation. But why? It is because high-rise buildings usually have a lower cap of appreciation compared to a landed properties.
So come to think of it, it's more acceptable for a landed house to increase from 400,000 to 1.2 million compared to a condo being 1.2 million, right?
Yeah. So after understanding capital appreciation, how do you choose a property that you will enjoy good capital appreciation? So that's why we are here to share to you the 3 major tips to choose a property that will give you a good capital appreciation.
Yeah.
So first and foremost, what we're always looking for is location. Location.
Location is super important when it comes to choosing your property investment. Where there is demand, there is supply. So try to choose a location that requires supply. For example, places like near to schools, near to work areas, and more, because they need places to stay. As much as in the olden days, any properties will go up in price, but now because modernization is growing from the city center, property prices at the city central are way much more expensive and prices go up way much quicker.
Secondly, would be a developer of good repute. Choose a property which is built by a developer who has a good reputation in the market. It may seem unrelated that capital appreciation is closely related to developers' performance. Many think that the developer would not have much effect on the future resale value, but do remember that the developers are generally involved in the formative stages of the project.
A reputable developer with good financial stability can set a development up for success in the long run. Long after a property is handed over to its proud new owner, the effects of a good developer can still be felt.
Reputable developers have strong relationship with good architects, material supplier, and construction companies, which means that the quality of their property will stand the test of time. Such developers also have a comprehensive understanding of planning laws and construction requirements, so owners and potential buyers can rest assured that their property will always be up to standard.
Also, the value of a good brand will always sweeten any property deals. So when it comes to a strata title, do remember that a good management team can help in keeping your property well maintained, so the property prices increases. Lastly, choose convenience and accessibility.
If you're a homeowner or a tenant, for example, you can't deny the value of convenience, right? People nowadays are prioritizing time over literally anything. Well, we tend to choose to pay more to save our valuable time than actually wasting it, right? If your property is well maintained, it's accessible, like close to the main road, close to the shopping mall, or even close to, in terms of transportation, their workplaces, this will result a drive of property value go up in time.
As residents and visitors experience for themselves the convenience of a well-planned property, this will build the project's positive reputation and also attract more discerning investors and reputable commercial brands to invest in that area. This will in turn further increase the development's reputation and value. Despite talking about the advantages of capital appreciation, in VC we talk about goods and bads. Yes, it sounds attractive to accumulate these properties and just buy it and flip it, right? But when it comes to capital appreciation, how sure are you that the prices of these property will increase? 2%? 5%? Who can actually guarantee that the saying your landed house can double in price in 10 years?
So additionally, don't forget about the real property gain tax. The RPGT is one of the most important property related taxes and is chargeable on the profit gain from selling the property. Whether you are a property investor or an owner just simply looking to sell your current home to purchase your dream home, for example, it is important to be aware that all of these costs when it comes to a real estate transaction will be paid. So you can be charged up to 30% if you're selling off your property in 1 year time, or at least 5% if you're selling a property that you have owned for more than 6 years. That's another payment to actually be concerned.
Yep, exactly. This is often a saying, especially for elderlies. Haya, buy landed property lah. In 10 years time, sure double in price one. But who can make sure of that, right? As much as you can do the calculation for a prediction on the increase of price per year, but do take note that if you're hoping for a high capital appreciation, then it isn't promised, as it is affected by a lot of different factors.
Nevertheless, the value of capital growth isn't only reserved for when you sell your property, but also provides a protection against the inflation. A 100 ringgit today can be 96 ringgit next year.
Yeah, that's sad. Putting your money into property helps you to preserve your money, not just as savings, but money making too. So if you're considering buying a home, definitely do. The changes in interest rates can greatly influence a person's ability to purchase a property. The lower the interest rate goes, the lower the cost to obtain a mortgage to buy a home, which creates a higher demand for real estate, which again pushes the property price up.
Yeah, so if you didn't know yet, personally to us, 2021 is one of the best time to buy property, as it's one of the lowest interest rate. There's a lot of packages and all that benefits for you as a home buyers or investors. So we actually made a video about why 2021 is the best time to buy real estate. You can click there to watch it. We link it down below for you just in case if you missed it later on.
So what do you think about capital appreciation? The next time, we will be doing a comparison whether I should focus on capital appreciation or rental yield. So if you haven't watched the video about rental yield, so you can click it right here. We've also linked it down below just in case you missed it again.
So that's it for today, and thank you for watching. If you gained some new knowledge from this video, please do give us a like, consider subscribing, and we post a lot of property, real estate related content here in this channel. Feel free to join the VC family, and we'll see you in the next video. Ciao!